All right. Hello, everyone. Happy Tuesday, and welcome to today's market check-in with myself, Greta Wall, and David Prince, the leader of T3 Live's Inner Circle virtual trading floor. Hi, David. How's today going for you?
It's good. No complaints.
Okay. All right, good. No complaints. All right, so the topic of today's discussion is trading into the CPI with David Prince. We're going to be talking about how you're positioning yourself, setting yourself up for tomorrow's report, and some reaction to the numbers that we've already gotten today. So the first inflation report we got today that, as you and I were talking about ahead of this, has the market kind of in a Goldilocks mood, a happy mood, is that the PPI came in lighter than expected. So we saw wholesale inflation rising 0.1% monthly and 2.2% year over year. The core up 0.3% monthly, 2.4% annually. Both of those numbers were lower than expectations. So after today's, this morning's number, what is your assessment of the market mood as we head into the CPI tomorrow?
Well, I don't think anyone will be shocked by me saying the market feels a lot better today. I'm of the thought that the time to go out and buy stocks was when they were discounting some really bad news last week. So today I get the numbers, right? We have some confirmation that, again, inflation is waning and we're seeing price control and we're seeing a general slowdown, as opposed to concentrating on an abrupt slowdown that's so bad that the economy is falling apart. Now everyone's back to Goldilocks for the day. But the price movement is so aggressive across the board, one has to wonder if we've baked in some upside into tomorrow's CPI report. I wouldn't go out and say I'm all out bearish. It's not like I've put out a bunch of shorts, but I think the time to go out and buy stocks when they, across the board there were discounts was last week, not chasing today. But market feels much better. It's back to, it might be the perfect landing. Inflation is slowing down. It turns out the jobs market isn't too weak and the economy can still limp along and we can have that perfect landing. Till the next time everyone fears that the market is wrong and it turns out it's not a perfect landing. For now, we're back to that beautiful landing scenario.
Mm-hmm. The CPI is tomorrow morning at 8:30 a.m. Eastern. The headline expectations are 0.2% monthly, 3% annually. The core expectations 0.2% monthly, 3.2% annually. An interesting survey that came out yesterday, the New York Fed's Consumer Expectations Survey, showed consumers expecting inflation to be better over the 3-year term, which is, of course, an expectation of Fed rate cuts to come. How are you positioning yourself ahead of tomorrow's numbers as we go through today's session in this happy mood? What are you doing for your own trading today and overnight?
Am I mistaken, or the number was like as aggressive in terms of expectations from everyone they surveyed as they've seen in over a decade? Is that?
I think for the 3-year term, it had cooled down. The shorter term was about the same, but the 3-year term had cooled, which is an evidence of people expecting, rate cuts. So then,
I think it's a little bit where the market is, meaning that we talk so much about the cut cycle and the economy slowing down that it continues to put pressure on things where if they don't come out just perfect, right, then we're in danger of losing some bids in certain stocks and indices like we saw with IWM, which needs that perfect landing, not a slow growth, no growth, decelerating environment where interest rates get cut, because it's still, these are smaller companies that needs the economy to grow. So where I think of it is hopefully the market is calmer now. And, there were people calling for, an emergency cut last week. And that puts a lot of pressure on things. I think now the market is more even keel. In other words, okay, the economy is slowing down, but it's not this abrupt halt. We may not get this emergency cut. And some people are even coming to the realization that it may not be, a half a basis point. It might be just a quarter point cut like originally expected. So that kind of puts things in neutral, meaning if the market understands that, then there's less pressure for everything to come out perfect. So here's where I stand. Last week, I was an aggressive buyer. It's just my way. I saw value. I saw certain areas of the market where I thought risk reward, regardless of what the market did, I could win. So I'm not going to give you the lows on each stock because that would be done. I started buying NVIDIA at 97. But I did buy most at 91s on that flash open. I remain long NVIDIA, smaller than I'd like to be. I wish I had every share and was selling today, but I sold a lot into 107, now remain long. I did the same with SOXL because I saw the semiconductor sector just decimated. And to me, it didn't make a lot of sense. And I really saw some meat on the bone. And in terms of how to trade it, I thought, well, I'm expecting a big snapback, so why not use an ultra? So I went with SOXL. And again, not going to give you the low because I started in the 28s the Friday before it happened. And I bought as low as 23s. Here we are, like 40% higher. I've trimmed most, but remain net long. And, I have my baby Immunome, who's, lower this morning, mid 12s. I said, well, I'll buy some of that. I think the stock's worth 30. So I did. And I'm basically buying value when I see it, but I'm not chasing the market today. It's a good day, right? I don't have complaints. I tried to short Apple. That didn't work. But overall, my point is it's a good day and I'm riding winners. And I think into tomorrow, there's some heightened risk now because we've built so much in. So I'm sticking with my winners. TQQ was my other big long holding last week. That sadly, I sold all by 58. So I wish I had some of that today, but remain net long and throwing out a couple of cute shorts as we speak. And in fact, I am got to do one thing. I'm going to cover some of my Starbucks right here, people. And I did short some Starbucks today into this wild move, and I'm about to cover some. Okay, so that's where I stand.
Coming off of a week like last week, the volatility was, of course, heightened to say the least last week. A good week for a lot of traders because volatility, of course, gives you more opportunity on both sides, either short or long, depending on the day, depending on the moves in the market. When you come into a week like this, what were your expectations for the sentiment in the market and how much things were going to be moving after we had such a volatile week last week?
My thought was people might be a little bit disappointed that we're not going to have a back and fill and vicious back and forth like everyone wants, because it kind of makes it easy when that happens, or easier. I didn't anticipate we'd keep going up this far. Like I was fine going higher. I remember thinking Q's 455-ish, 460. I didn't have in the cards, but I thought maybe a little less volatility and more chop. Now we're just, off to the races and keep going higher. But what usually happens is that type of massive volatility, it'll come back, but not on everyone's time frame, meaning everyone wants that like back and forth 20-point, moves in stocks and 10% moves daily. And then we kind of get quiet. There's some chop. Some people who look for confirmation that's a bottom is in, they come in. And you get a little stretch to the upside. And then next week, when everyone's calm, this is the way I see it, you get some volatility again. And that's been my experience. It's not going to be according to everyone's time frame the way they'd like. And that's just the nature of the beast. I don't think the volatility is gone, but I think we saw the extreme last week.
Mm-hmm. Heading into that huge move lower last week, many people were positioned in, like 7 major stocks. The Mag 7 were the stocks that was the market. Mm-hmm. Do you feel like what happened last week helped to balance, positions across the market in a more broad-based way?
Good question. One second. I don't know, frankly, if it does. Right? I think if anything, I have to say, maybe people search for safety. I get it. They're crowded names, but I'm going to go with that's last week does not embolden people to do that and emboldens them to kind of maybe narrow things down actually and not have too many positions and understand the days of zero volatility might be gone. And thus maybe they'd rather own Apple than another 200 different stocks. So I don't know about that. I will say, I think people's comfort level and just higher for higher and buying highs and selling higher, that changed. Whether or not the dynamics of buying Mag 7, no. Here's what I think changed. Earnings. I think earnings weren't up to snuff on a lot of these names. And that's why I've been pretty dogmatic about, hey, NVIDIA, and then Meta. Those are the two names from Mag 7 I'm focused on. And I was aggressive on Meta last week because to me, that was best in breed. As far, we haven't had NVIDIA's earnings yet. But when I looked at that report versus valuation, where the stock was trading, to me, it was a no-brainer to buy that stock on dips. So I think that's what changed, is earnings made people look at these names a little differently. I get it. Amazon might be cheap in some people's eyes, but everything is not perfect at Amazon. And people wonder whether the consumers stretch. And their numbers kind of alluded to that. Because, the profit engine, AWS, worked and everything's fine. But the consumer, not so much so. And that's what people are concerned about. So my point is, where the money gravitates towards, that changed via earnings, not Japan.
All right, great. We got a question, and I just want to talk about it now because this is a topic that I want to talk about. Ari from Twitter asked if CMG is a buy now. So, Starbucks hired Chipotle's CEO. Shake up there between those two companies. So what are your thoughts on that move, that executive move, and how it affects each of the stocks?
So here's the way I look at it. This guy's a rock star, right? Whether or not we think the move makes sense or not, in CMG down and Starbucks higher, it almost doesn't matter, right? All that matters is he's a proven rock star. He has taken Chipotle and turned the company around, made it lean and mean, instituted so many new versions of it. He just totally changed the company. I guess it was in 7 years, and the stock performance was unbelievable. So you have a bunch of institutions, right? And by the way, I've done the same. Like, I have CEOs that are rock stars where if they do a deal, I'm in, right? Whether it be pre-IPO or after, there's just certain people are like, I don't care the valuation anymore. I'm riding that jockey. In fact, because I'm not very smart, for many years, that was my business model in venture capital, and it worked really well. I'm not going to overthink the financials. I want to be backing that jockey, excuse me. So the answer is I wouldn't rush to CMG because they just lost the #1 Kentucky Derby winner, a million times jockey in the business, and he's now at Starbucks. Is business bad or things changing? No, but here's what's going through institutions' mind. He's not going to like the new hot growth story. He's not going to a company that's got a real cheap valuation that he can grow into a unicorn. He left Chipotle to join a company that some say might be trading at 26 times earnings right now. So you have to wonder, maybe he thinks it's a tough road ahead. I'm not saying he thinks things are bad, but maybe things aren't great. That's what has to go through people's minds. He just left to go to Starbucks. Starbucks is not like a small little ship. This is not like an easy fix. I get it. The stock's price is amazing, but you have to wonder. So my thought is this cloud's going to be with Chipotle for a bit longer. Now, if you love the product and you love the margins, and you just think long term, it's a buy. Sure, you could buy some, but to me, it's probably not a buy yet. Just and I'm the first guy to not. I was buying last week. An aggressive dip like this does not buy me if it warrants a valuation buy. Here with Chipotle, not so sure. So I wouldn't be rushing into it.
All right, great. All right, let's talk about the retail earnings that we're getting this week. We got Home Depot's numbers this morning. They did beat expectations on both the top and bottom line, but warned that they are expecting the consumer to slow down. And then we're going to get Walmart's report on Thursday morning. It's, of course, a big one for, Walmart, Target are considered the biggest retail sector earnings. And
good broad range of where the consumer is.
Because it's different consumers, different consumer baskets. And we've seen Walmart outperform while Target's had some trouble. What is your reaction to Home Depot's numbers this morning and their comments on the consumer expectations? And what are you looking at for Walmart? If you're looking at anything, expectations, etc.
My thoughts are this. Cramer, actually, I can't believe I'm saying this, in a very non-emotional, calm way, said it perfectly this morning. He said, listen, Home Depot's not about the number, and it's not about the fact that they lowered their guide. It's the fact that we're going to have lower interest rates, and it's actually more a buy than a sell. So the reversal does not shock me at all. It makes perfect sense given the news, meaning PPI and people anticipating several rate cuts. So if you really look at it in terms of what the PPI and hopefully CPI means towards housing, and as it relates to Home Depot, the reversal makes perfect sense. I get it. They're concerned about the consumer, but nothing new that should shock anyone. And it's not some massive guide down. It's just, hey, we're a little bit concerned. And Home Depot is really going to be a proxy for interest rates and the Fed cutting rates. So to me, the reversal makes sense. Walmart, I've never been it's been about a decade since I really put too much credibility in it. I will look at it as it relates to the economy and people spending, and maybe if the consumer is in bad shape. But in terms of what I'll do with the print, not much, no interest. Target, I'll look at it a little bit more closely because I have traded Target because there have been some big extremes. They've obviously gone through their issues, especially during that whole, excuse the expression, but woke moment. I'm not using it for me. I'm just saying, they had their moment and it was obviously devastated. So there are times there's alpha in that stock as they try and turn things around. A little bit more interesting to me versus Walmart, which is just a general good view of the U.S. consumer, but it's nothing I'll play or see. I don't see anything to do there.
All right, let's take a look at what you've been doing in the inner circle. You sent out this tweet on Friday, said ELF has one precarious chart well below the 200-day and not oversold. And you went home with puts on Friday. So at 3:30 p.m. on Friday, you said you were long the ELF August 16th 155 puts. Those exploded off of the open yesterday morning. You trimmed on your way up and then got flat just after the open, 9:34. What were you seeing in the ELF chart that said, yeah,
a broken
I need to buy some puts?
Right. A broken stock that frankly was not even yet oversold, that probably had another 20 or 30 to the downside. And I just thought, rather than just sit on it and not look, one of my partners, Kira, brought up the puts and I thought, great idea. Because at least I don't always love shorting. It had a bad print and stock was down a lot. It's not always exciting to short a stock when it's down already 25, 30 points. So I thought, what a great way to take advantage of further downside and also limit our risk. So went with puts and thankfully they exploded yesterday. So we took profits.
When it comes to holding a position like that over the weekend, are you more inclined to hold some, longer term options versus shorting a stock and holding that into Monday morning?
No, I have zero problem shorting stock and holding it. But when I do, let me give you an example. I am not shorting SMCI, but if I were, right, and I was chasing it down as a lot of shorts were doing, margins were an issue and the stock kept going down and down and down. Well, if I looked at that stock and said, all right, this stock has gone from 1,200 to 500 and even a little bit below for a moment. My point is, I wouldn't want to do that via stock. I'd rather pay excuse the expression, the VIG, the premium and the options, and at least know what my risk is because I don't want to wake up, see a short squeeze and see the stock up 50. So when I use options, it's because I might think I'm late or at least I am concerned about my downside. It's not really about the weekend as much as it is about the positioning in the stock. So I always find it a good way to say, I can go to sleep at night. This is my max loss because I'm doing it via puts as opposed to stock. Wake up, see it up 50 and wonder whether I have to cover.
Yeah, great. All right, let's look at one more thing that you've done recently. Last Thursday, you and I were talking and you told me, wow, this may be my best day of the year. And that was because you had held some really large overnight trades in TQQQ, Meta, and Soxel from Wednesday. So let's take a look at those charts really quick. There's the TQQQ trade. You went long all three, 7:44 p.m. Eastern time on Wednesday. So in the after-hours session, TQQQ.
We were already long all those from Monday.
Right, you added
right.
to the
and we got this aggressive dip after hours where the Qs went as low as 4:30, and I said, "Well, I don't know if it's going to be this."
Don't talk through it yet.
Sure.
I'm going to show the charts, and then you can talk through it. So we got TQQQ. You were buying those as low as like the 51s, selling around like the 57s Thursday morning. For Meta, you were buying around, it looks like the 480s and flat over 500.
481 Wednesday and after hours.
And then you were flat around 500. And Soxel as well, you were buying under 26 and flat or down to a trailer around like the 29 mark. So what happened after hours that told you to add to these positions and then talk through the trade Thursday morning? If you can, remember back to this.
Yeah, those I can. I mean, those horses are more an investment. I'm still long Soxel and have been a buyer on every dip. Not today. There hasn't been any dip. So Three keys. TQQ represented what I thought would be a vicious snapback rally in the Qs. That one might get sold off, but at least last week I deemed it a great opportunity. We were off as much as 16% in the Qs, and it felt like it was time. So it was a way to basically take risk with the broad market and be a part of a bounce and maybe get paid a little bit more money by doing it via an ultra, which is not something I typically focus on, but in this case, TQQ. Wednesday, we had some panic again, which I said that's the market we're in, right? Everything's fine. And then midday, there's a panic. So we got that panic after hours, got a bit aggressive added to it. And I got flat the whole TQQ position, sadly, at like 58. SOXL, same sort of deal. I thought the SOX was oversold, got beneath the 200-day, even crossed beneath, what was it, 200? Yeah, and just felt silly because the fundamentals really in many cases are not only good, but improving. Not every company reported perfectly. We just had some major companies report, and from the KLA 10 cores to the applied materials, and everything seems just fine. It didn't warrant the type of pullback. Like the whole pullback was really led by semis, which have led us up. So it wasn't a shocker. It just struck me as the first opportunity. So same thing. Let's get aggressive with the SOX. That should be the first to rally. The NASDAQ can't rally without the SOX. So we did it via SOXL. Still long some, trim some today because it's 33. Where are we now? 33, 34, 34s. So I'm down to a trailer. And the third one that we're talking about is Meta, which I wish I held. Sadly enough, I had some from 490. We bought more 481 on Wednesday night, and I got a little too cute counting my money line. And when I saw 500, I got flat. It's best in breed after a wonderful quarterly report from them. So a mistake, right? An absolute mistake. I wish I still had my stock, but that was really the plan. Have some key names that we're not buying just for the volatility. We're buying because the fundamentals back up. They should be bought during that volatility. And then as the market feels a little bit better, like it does now, trim and trail. I trimmed some NVIDIA yesterday. I haven't trimmed any today. And NVIDIA was obviously the other major one from last week. That was maybe the biggest focus.
Someone wants your thoughts on Meta. So he said Meta, which looks good above the 50-day average and above the 200-day. The only thing that bothers me about it is that it has been moving sideways since February, not rising in an ascending channel. What do you think about that? And for everyone, kind of last call for questions, so we can make sure we get them answered.
Yeah, the really nice fellow. I think he's from Israel. We chat on Twitter sometimes. He's very into charts. To me, charts screw you up in a stock like this. It was really simple. Had a great report. 450 was the low last week. It came into some key averages on a valuation basis, on an earnings basis, on rotation. You can see it, as money was coming out from NVIDIA and Amazon, it was first flowing to Meta. It seemed like a screaming buy. Now the stock has rallied 75 points off of 450. Let it pull back. Let it catch up to the 8-day, which is 15, 20 points beneath here, and sit. There's nothing to be done right now. But, you can chart it till you're blue in the face. It's not far from highs. It's the best looking Mag 7 name there is right now. I mean, you don't have to be a chartist to know that. So if it pulls back, I'll be a buyer again.
All right. He'd also like your opinion on.
I have none. He loves it. He talks about it every day. So I'm happy for him if it does well, but I have none.
All right. So as we head into the CPI tomorrow morning.
I think we have some heightened risk. Qs are popping, right? We continue to make highs. So I think we have some risk. We're kind of.
You say like a light number is probably baked in with this little rally that we're having.
I have no problem saying 85, 90%, unless, even a really light number that people are going to get concerned. The economy is abruptly coming to a halt. It's not just a slowdown in inflation. So I don't see a great setup for tomorrow morning. We have now rallied top to bottom 423 to 461.50 in the Qs in 7 days. 6 days. Yeah, I've been around a long time. That's a big move. So, I don't see a great setup for tomorrow. Would I go out and short everything? No, but I don't see a great setup.
All right, great. All right, so for everyone.
That doesn't mean I'm going out and getting flat SOXL. I'm not selling all my NVIDIA because I Thought about doing that 7 points ago. Thank God I didn't. And now we're going higher. It just means I want to say this because on Twitter, like every time we get overbought, I get this. Last week, I'll try and be vocal. What's the point? Me telling people that I bought NVIDIA, now I'm up 20. So when I'm buying it last week at 91, I'm telling people. My point is people are quiet. Now today, everyone's bullish NVIDIA. We see it's above the 21-day. It's going to 120 and everyone's excited. SOXL, the MACD crossed this and everyone's all excited. No, like all these have moved. If you're first buying these things and you're waiting to buy now, all you're doing is killing your risk reward. So we could go higher. So I'm going to hold my winners. Am I going to go out and first buy these now? No, I'm not an idiot. And I hope no one else is. Like there's a risk reward always matters on everything you buy. If you're day trading them, that's a different thing.
All right, great. All right, so David and I are hosting a webinar tomorrow to give people a chance to possibly join your room. So if you want to go to t3live.com/DP, you can sign up for that free webinar, learn more about the inner circle and the opportunity that you may have to get into the room and see some of David's ideas in real time. Of course, there's qualifications to join the inner circle, but we'll be talking all about the recent wins and how David has been navigating this market and his plans for the rest of August and September. So if you want to join, that's t3live.com/DP. It's a free webinar to get some questions answered by David and again, learn about the room. David, thanks for doing this with me today, and I'll see you there at the webinar tomorrow.
Thanks.
Have a great rest of your trading
See you
day.
tomorrow. Thanks for joining, people. Have a good day.
Bye.